Greg, as always, got your finger right on the issue that everybody's kind of trying to wrap their heads around. I thought Dave Zervos put it well yesterday when he said the Fed is getting more power, but it's trading its independence.
Yeah, I think that's something that we really have to ask. Now, first of all, the Fed is doing what it has to do. We're in a kind of a crisis, sort of like a wartime situation, and the Fed is not going to be doing anybody any favors by sort of like waving the Federal Reserve Act in people's places and saying, no, we can't do that. And you got to give them kudos. They moved effectively. They moved rapidly. They made decisions that were quite defensible, that were not inflected by politics. But let's look a little bit ahead of here, Kelly. They are going to be making decisions with these facilities where they'll be lending to municipalities, to big companies, to small companies. Which corporate credit are they going to buy? Which asset-backed securities they're going to buy? This is a job that is supposed to be done by private markets. Who gets the capital? Who doesn't? We're going to have unelected technocrats at the Fed doing it. And here's the issue. Right now, that seems like a necessary thing to do. It's good that they're putting the money out there. But what about when the questions become a little bit more fine-grained? You're going to have companies going to their congressmen saying, hey, we'd like some of that credit. You're going to have municipalities doing the same thing. And there's going to be pressure on the Fed to be responding not based on what the data and the financial markets suggest they need to do, but what on the politics suggests they do. And that's something we need to worry about.
Right. And they've also changed their tune on this. And first, it looked like they were going to try to help the strong, not help the weak. Now they're buying junk bond ETFs. You know, the Fed's not supposed to be picking winners and losers, but in this case, it inevitably is, like you were just outlining. Could there have been a different way? Is there a way they need to massage or think about that communication now? I mean, even just contracting this stuff out to the likes of BlackRock as money managers is going to bring up these conflicts of interest.
Right. So now the Fed will say that they are not picking individual firms over others. They're setting broad criteria for classes of borrowers. So they'll accept this investment, this credit rating, but not that credit rating. And that's all well and good. And by the way, that's more or less as it's basically been instructed to by the law of Congress. So I don't really question their sincerity in this. But let's face facts, is that in designing the facilities and which criteria you're going to use, that necessarily excludes some companies and some others. By deciding that fallen angels, companies that were investment grade up until March 22nd, would be eligible, that was essentially turning Ford into a winner, even if that wasn't the explicit design. And I think that, so there's that issue, yes. Why do we want the Fed to do that? There was another way to do it. We could have just had Congress borrow the $3 trillion and make all those decisions.
Right.
The economics are exactly the same. I mean, at one level, I suppose it's a good sign that Congress trusts the Fed, probably more than they trust the Trump administration, to do this properly. But there's going to be some tough questions ahead, Kelly. I mean, you know, Jay Powell said that on September 30th, we'll decide if these facilities are still needed. And I don't doubt that he will apply a very nonpartisan, economically informed view to that. But Steve Mnuchin might have a slightly different view, you know. He might have an eye on the election and what he wants the shape of the markets to be in. Those are the kinds of conflicting incentives that the Fed is going to have to negotiate.
Yeah, again, we're just at the beginning, I think, of that. Greg, thanks so much. It's a great piece. And thanks for joining me today. I really appreciate it.
Thank you, Kelly.
Greg.